One of the top questions people have is what will cause the next bull market to begin? And if you look at just in the last 20 years, what caused bull markets to begin, sometimes it was just things that you would never expect, but at the same time, it's things that we kind of do expect. Like, let's say this year, stock market has crashed pretty dramatically because the Federal Reserve has raised rates. And what does that mean for the stock market? It means basically that people are willing to pay for a much lower PE on stocks. Like when interest rates are low, it allows for PEs to expand. They call it earnings expansion, and people are willing to pay a lot more for stocks. And so even if stock earnings don't go down, stock prices can go down because people are just a lot less willing to take risks, especially as interest rates rise and there's risk-free opportunities, and they're just willing to pay a lot less for particular stocks. And 2003, that was a major stock market bottom in March of 2003, and that time period was the Federal Reserve was actually, I believe, lowering rates, which of course is what you kind of ingredient you need to get the stock market bottom. But also there was a major tax overhaul at that time period. And ironically, it was a time period of the Iraq War. Sometimes wars are things that actually cause the stocks to go up. Then let's go back to 2008. You had the major crash, and the Fed came out in March 2009 and actually in February 2009 and said, we're gonna put an end to this crash. We're gonna fix things. There's a bailout, and they're gonna lower major interest rate reductions and quantitative easing and all that stuff. And they actually came to the rescue again in 2018. They said they're going to stop raising rates, and in 2020 they took rates to zero. But now the Federal Reserve is not our friend anymore, because they basically are saying we're committed to raising rates no matter what. And when you look at these major companies, do you actually get the sense that there's something coming around that would cause their earnings to go to the moon? Like, when you look at their earnings, there really aren't any companies I could think of where the earnings are just so spectacular. Like, it's just the beginning of one of the most exciting times in history, like a new major product. This Apple has, think about with the iPhone, that was such a revolutionary product, and you're not really seeing that a lot lately in terms of what companies are releasing. Like recently, Apple released the new iPad, and it was such a boring update, they didn't even bother to have a presentation. So it's kind of an example that it's not really going to be firm earnings that will cause the next bull market. And the Federal Reserve doesn't seem like they're indicating that there's going to be any change on their interest rate policy anytime soon. They are committed to raising it. And if you think about it, this is also very similar to the Great Depression, because during the Great Depression, the Federal Reserve and Congress, they basically caused a liquidity crunch. Federal Reserve was raising rates, and then Congress was cutting off trade. You kind of see similarities to now. It's not the exact same pattern. Congress is not really imposing protectionism per se, but like China is pulling away from the rest of the world, so there is less trade. So there's going to be inflation as a result, because you're just going to have a lot of issues with supply. And it just seems as though there's a big move to crunch things, because the rates going up so fast, it's really causing huge issues for the stock market. It can't really rise for too long because it's very weak. All the force out there, it's like gravity, it's just pulling it down. And so I actually think it may be a long time. If you look at the Great Depression, it took 4 years before the stock market hit its low. And of course, by then it was down more than 90%. I don't know if it's going down that much, but if you think about it, you have to actually prepare for that potential. I think a lot of people, they still are a little bit too optimistic. If you think about the Great Depression, was anybody optimistic about stocks way at the bottom? I don't think there were any, hey, let's buy the dip. This is a great value at these prices. Prices were really dirt cheap at the bottom of the Great Depression, and yet you probably had struggled to find any buyers at those prices. So I always get scared when I see people who are still kind of optimistic on the stock market, because that means that there's actually a lot more room to grow if people are too optimistic. You need to see people saying they never want to buy stocks ever again. That will be a sign that things may be turning around, because the stock market is built to confuse you. And, you know, a lot of people call it a casino, because maybe it is. They cause you to sell right at the wrong time, and then they're all going to push the market up without you. That's basically how they do it. But a lot of the people on YouTube, they're going to be proven wrong, because a lot of them are saying, hey, I'm an investor, I'm not a trader, so I'm going to tell you to buy these stocks. And even when they go down, they don't tell you that there's a risk in owning this. Maybe they should have told you to cut your losses on some of these things. And also, their strategy made sense in a very long bull market. It just didn't. There aren't a lot of people who are willing to hold on to their investments as they continue to go down year after year. So it's going to be interesting to see how a lot of their investment ideas are being tested in real time. Anyway, subscribe, like this video, and I'll see you in the next one.